Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's first comment as we get back to week here after the long holiday weekend. I did kind of wanted to wait and see what happened. We had kind of an odd trading day. You got beans down 15, 1039.5 under pressure. Really, what pressured that was the fact that last week the Chinese said, "Yep, we'll talk to you in 2 more months." So they kicked that can. There were some headlines there about the meeting with China and Russia and India, but that's no surprise. I think this was really just more about the fact that we're looking at 2 more months before anything gets fixed with our beans going to China. That's, I think, what's pushing beans. Now, give that, with that background, we're still sitting here at 1040. So, and then my estimation, for beans, 1040, if you look at where we were down at 980, is that worth anything to you? I don't know. I think a lot of people would thought, myself included, that we'd take one more run up to 1075. So yeah, a lower day here to start the week in the beans. I will say this, I'm impressed with corn hanging in there, D's corn hanging in there at 420. If you read my letter, you know that's 420, 422 area is a little bit of a technical area. It opens up the door possibly to more short covering. The one positive thing I can see about money flow after looking at the weekly update, again, if you're not getting my letter, please sign up and take a look at it. Every weekend it takes me about 3 or 4 hours. I do all the charts. I do all the money flow breakdown. I do all the homework so you don't have to do it. And, if you break it down, it comes out to about $1.50 a day, $1.37 a day to get all the information. So I like these corn here at 420. Can we go higher? Absolutely. The fact that we had pressure overnight and we're fighting back, I like that. Whenever a market gets kind of negative news and shrugs it off, I think maybe all the bad news is factored in for corn, and we'll see. We always have to worry about that low 392. That was the low we put in the date on the last USDA report. We've got another USDA report coming up this month. Every month they give us one, but last month it was a biggie. So I think you keep your powder dry. You don't get overly bearish or bullish right here and look for rallies to reward. I'd love to see us go back and fill the July 4th gap, which is up there around 33, 34. Again, sign up for the letter. You'll get the levels every single day. Wheat, coming back off the lows, but again, wheat is probably it's the redheaded stepchild. Anytime anybody needs to sell anything, they're putting pressure on wheat. Chicago wheat hit a new low here, 522.25, down 8.5. December, KC hit 507.5. It held, but I think KC is probably the biggest risk. If we take out $5, that's going to be the headline that we don't want, and also Minneapolis wheat. So you've got wheat under pressure. The only thing that's going to save wheat, I think, is a sustained recovery rally in beans or corn. Today looks like one of those days where the money flow was buying some corn, selling some beans. It's the highest tick in corn we've had since July 28th, so that's a positive. Again, but the big number that I'm looking at is we need to go fill that gap in D's corn at 432.75. It was the July 3rd low. We gapped open lower. So I think this is a rally in a bear market, and we're looking to reward it. On the outside markets, the stock market's only down 300 after, again, a lot of negativity coming out after the 2 headlines regarding tariffs. You had an appellate judge say that tariffs were illegal, and why is that bad? Well, it's more uncertainty. And there's also a possibility that we might have to pay back the tariffs that we've collected, So it's just another craziness coming out of Washington, D.C., and it makes it harder for everybody to figure out which way we're going to go. We have to get this tariff situation settled, especially if you are long soybeans. We really need the Chinese to come back. We grow 4 billion bushels of soybeans. For decades, they've taken 25% of that. You just can't have 25% of your market demand at risk and look at higher prices. So the fact that we're sitting at 1040, I think, is probably glass half full. I tend to be glass half full. I'd love to see us get run back up there to 1075 one more time. All in all, I guess the way I would leave it this morning would be is it could be a lot worse. We'll try and keep our powder dry. Look for a better close. I do like the way corn's trading today. We'll see if it has legs. The two most important settlements on the week are the first day of the week, which because of this holiday is today, and then Friday. And we'll see if we can extend this. But no new news other than that. The weather remains non-threatening. That's really not going to be an issue. People are talking about potential disease impacting yields. I would say this: if you're bullish, if you're a farmer and you're bullish, you're hopeful that we get more news, and especially on social media, that we're going to have, anything that cuts the yield at this point, because that's really what dropped the hammer on us back on August 12th. That 188.8, 16.7 billion bushels. That is what's corn's fighting. So when you throw all those negative fundamentals, to see corn sitting at 420, that's a bit of a victory. Again, the big level that I'm looking at is can we get back there to the July 4th gap? This is Chris Robinson. If you're looking for specific help, give me a call. I work with both end users and producers. I try and tell you the way it is. I try and tell you what I think. I don't give you any promises. I don't care if you're a bull or a bear. We're going to make sure that whatever your idea is, your ideas don't end up hurting your bottom line. This is Chris Robinson. Have a great day. Give me a call, 312-638-8868. Take care.